After experiencing the most catastrophic hurricane season in the region, the Caribbean is seeking ways to build resilience and protect the lives and livelihoods of the most vulnerable. In November 2020, due to persistent excess rainfall, the agricultural sector in Jamaica experienced losses of an estimated $14 million. With the increase and intensity of natural hazards and the limited number of persons insured, many people are left vulnerable to climate hazards. In lower and middle income countries, the protection gap from natural hazards is higher than 90%. This translates to millions of individuals left vulnerable to natural disasters, limiting quick response and recovery efforts to protect livelihoods and business growth. How can vulnerable groups benefit from financial protection? Farmer John lives in St. Lucia and has lost thousands of dollars because of climate hazards. With a young family, John needs to find ways to maintain his livelihood. John decided the best option was to set aside $100 a month for small climate-related losses. However, when severe hurricanes hit, these savings were not enough to rebuild and buy new tools to benefit his farm. No, for those more severe but less frequent risks, Farmer John discovered climate risk insurance. Climate risk insurance typically comes as parametric insurance. The trigger is determined based on a specific event intensity, like a certain amount of rainfall or wind speed, assuming that the more extreme the event, the more losses an individual will suffer. In the Caribbean, there was only one parametric climate risk insurance product made available in Jamaica and St. Lucia. Under the leadership of Cpdc and its partners, the product is currently being redesigned to provide individuals with quick liquidity after a disaster. This occurs through receiving cash quickly, helping to build their resilience. And that's not all. Farmer John also discovered something else. By taking out an insurance policy, his creditworthiness would improve. Therefore, the bank would be more inclined to grant him a loan, since he would be able to pay back on loans with the help of his insurance after extreme events. So with this in mind, he took out a loan to invest in reducing his risk exposure and increasing his productivity. John is delighted with his findings on disaster risk finance. These three options will take some time to bear fruit and eventually will be available across the region. John is secure knowing he doesn't have to wait long and will receive an automatic payout to rectify income loss and rebuild his life if a storm comes. Join us as we continue to build a more sustainable Caribbean, and don't forget to visit the Caribbean Policy Development Center's Risk Resilience Hub for more information.